Wedbush Securities analyst Dan Ives joins us here at Post 9 to explain some of those figures. I suppose we should start with Apple. You appear to be comparatively. The expression that has been used is good enough for now. Does that make sense? In my opinion, that was as optimistic as Cupertino and Cook could have been entering into an iPhone 16 cycle that hasn't even started, not just with regard to the guidance. From a year-over-year comparison, I believe this is China's final quarter of negative results. It turns into a tailwind. Take a look at services. That seems really reliable to me. I would rate it a 98 relative on a scale of 1 to 10. It's difficult to be pessimistic about Apple entering what I see as an AI-driven supercycle for the iPhone 16, which is why I believe this stock can overcome the challenges we're seeing. Will that strength be debated against the concerns of the macro consumer that we just discussed for 10 minutes? That would be the point of contention, you see. However, I'll be back in Asia this week, and based on what we've observed, we started with 80 million units for the iPhone 16. It's up to 90 now. We have discussed this topic extensively, so it will be a balancing act. However, I think the story of the AI revolution is still intact when it comes to the data, the quarter, and what you saw from Microsoft from an Azure standpoint, Google and Amazon from an AWS viewpoint. Despite the tense market conditions, all of our checks indicate that now is not the time to worry. According to the FT, Elliott Management recently informed investors that Nvidia is in a bubble and that the hoopla surrounding AI technology is not being matched by reality. You are completely at odds. I am aware. I couldn't be more at odds. I believe we even discussed it in relation to where we were prior to conference calls and earnings. Now, let's examine the numbers. Examine the Azure acceleration. Take a look at what Lisa Su from AMD discussed. Regarding the acceleration that Azure is directing for the second half, we observed what we perceive to be unsatisfactory. This is where the monetization is discussed in detail. The bigots have persisted in their hatred, in my opinion. For the past few years, the bears have been there. I understand. It's simple to come out and shout fire into a packed theater at this moment. We don't see it, though, because the value matches the hype and goes beyond the call. In fact, I believe the street is underestimating the trillions of dollars in AI capital expenditures that will occur throughout tech over the next 3 to 4 years. Furthermore, nothing we witnessed here casts doubt on that. Dan, you're correct. Hear me out. None of them are abandoning their capital expenditure plans. To answer your question, AWS did demonstrate a 19% increase in revenue growth. However, there is still the more significant question of whether you will eventually see that return on investment. Naturally, you think that will be the case, but what do you think will happen in the near future in terms of applications that will begin to allay some of the concerns that some investors would have from an enterprise standpoint? In a few weeks, Godfather Bay Jens at Nvidia will share it with us. The number of enterprises currently pursuing AI has risen 45 times, as are the application cases. As we've always discussed, these businesses are headed towards what I think will be use cases in the healthcare, finance, insurance, and retail sectors. When it comes to expenditure, it all boils down to monetization, and I believe that this transformation is taking place when you consider what Sue and Nadella discussed, as well as what Sundar Pichai mentioned. Right now, the monetization phase is just getting started. To bet on this and to bet against it, in my opinion, is like betting against Cook and 2.2 trillion in terms of where we eventually see, the actual install base. I'm not saying that we'll have an air pocket between capex and revenue. And you see that Apple is genuinely on the verge of an AI revolution. That's a risky proposition. Do you think it could last a year? Unless that occurs within a year, correct? Would you become anxious if the rhetoric remained the same? I would say that if we sit here in January or February and we haven't seen it, we haven't seen the monetization from a software perspective, and we haven't seen it from a real standpoint other than the Mag 7 second, third, and fourth derivative. If MC Derman shows up and suddenly starts to be critical of AI, then we need to look into it more closely. Because of what we see, not only from earnings, but also from our checks, it's actually more emboldening right now. Bill McDermott has never said anything unfavorable about AI. He has, after all, turned around before. And although many people are currently kind of stoking the flames, I will take seriously McDermott, Sue, Medela, and Cook if they are seeing something. Get your. In the industry, design delays are extremely prevalent, and their major clients and partners are aware of this. However, the fact that demand is robust is what counts. Their current platform, Hopper, is experiencing extremely strong demand. Their ecosystem is still thriving. Nvidia is at the center of this still infancy development of digital and AI infrastructure. That's why I still adore that name. What do you believe Nvidia is worth at $98.48 now, 12 months from now, and 24 months from now? Although I am unable to provide a precise price target, I believe that the company's value has increased significantly from its current state. In the cloud environments, for example, you can observe that customers are investing in NVIDIA solutions and reaping the benefits. There is a change in those surroundings within businesses. Digital twins are used in manufacturing, for instance. NVIDIA solutions are speeding up drug discovery, research on financial services, fraud detection, and climate detection. There are a number of new use cases that are getting traction, and I have a feeling that in 12 and 24 months, they will be much larger. NVIDIA will notice this in their financial statements, which will influence the performance of their share price. At the moment, Alphabet, Meta, and Microsoft are all quite inexpensive, but they will eventually increase in value. That's why I haven't done anything in the past several days. As I indicated on the radio, I did purchase a small amount of Facebook, or Meta, during the major collapse. But it hasn't made a difference because the market is acting as though two volatile times are one and the same. They failed to discern between exceptional management, entrenched growth, and fortress balance sheets. They're eliminating them all. Therefore, I am unsure of the catalyst. As we discussed, the economic data that will be released this week are, in my opinion, the catalysts for the future. Because they will all be taken down if the data is poor and indicates a struggling economy. And that is when you come in. I have nothing to do on such days, which is the reason I dislike the market return at current levels. I don't buy the momentum. I don't sell my core names. In order to discover others and add to my already full holdings, I need a true washout of the market. The Semis Jimmy. Look, after the sell-off, Heath Lerner at True is now upgrading tech to overweight. This is one topic that comes to mind when discussing what people find more appealing. And based on the semi-name's performance this week, let's just use Nvidia as an example. It's not necessary to bring up Nvidia in every semi-conversation. This week, Taiwan CME is up 10.5%. Cadence and ASML, Qualcomm, Teradyne, Lam, Applied, and On CME are all having good weeks. They're on sale, you see. It doesn't matter which. We can discuss Qualcomm instead of Nvidia. I don't give a damn. They are now for sale. Not very long ago, Qualcomm was trading at $23. Today, it is trading at $165 or something similar, yet the company's prospects haven't really changed in the last 2 months. I love it even more here, if you loved it as much as I did when it surpassed $200. Regarding your argument, Steve, I don't care if you join me in Qualcomm or not, but this isn't your day. Hold off for a week or a few days. This is simply the current state of the markets. Going back to what I said before, though, if you enjoy Qualcomm and Applied Materials, which I also own, and you don't have enough of it, you can purchase it here. As Steve might say, you can wait a few days. In other words, given the rate of growth for chips, these stocks are probably going to be much higher in 3, 6, or 12 months. And now, Scott, I'll take a quick look at Nvidia since its stock is trading at a 32-fold forward multiple and its profits per share growth rate is expected to be 35%. It's for sale. That's on sale if the P/E ratio is less than 1. Get your Nvidia keychain now for less than $10. A huge discount is being offered, but only for the first 100 orders.